Yes, a very good evening to all of you. Right, so how's that going? Right, counting days now regarding how many papers are remaining and now preparing. Right now, thoughts might have started coming regarding audit. No, okay, oh, audit. There is a chapter of automated environment, and then company audit and caro, and so many other thoughts like items of financial statement and different types of entities, and then audit evidence and audit procedures and audit risk. Right, all audit might be bombarding you. They might be all attacking you, or coming memories would be coming to your mind. Okay, right. So as we begin, we'll try to revise and look into a few important questions and regarding these standards and so. But I would like to give you one advice over here, that whatever you prepare, whatever you study, whatever you revise in the today's day and tomorrow's day, do a very firm preparation. Do a very firm, a very concrete preparation. Don't have a flyover approach. Okay, just you saw the points on top of it and then you just read it once and you went ahead. That is not going to help you in the exams. Okay, certain points where you remember, memorize the headings over there, you know how it is required to be written in the exam, and say probably also do the writing practice for that. Right? So that you have the confidence, so that you are firm regarding the writing of your answers. So one thing which I want to tell you, okay, whatever question and answers you prepare, be firm in your preparation. I hope you understand this word I'm using over here, that be very concrete in your preparations for the exam. And second one which I want to tell you is that whatever content you are studying or whatever questions you are seeing, please link the question and the answer. If this is the question asked, what answer I'm supposed to write, and if this is the answer, what type of question can be coming for this particular answer? Because you know all the questions, you know all the answers, but if you don't know, okay, kaun sa question, kaun sa answer, so go, full confusion over there. So be very specific in identifying. Okay, don't have a light approach, have a firm approach over there regarding, okay, these are the type of questions. For this question, this answer. For this content, for this theory, this type of question could be asked. Okay, right. Then after that, you have so much of the content to study. So what you can do, you can divide your studies into, like, you study a few auditing standards. Right? You study, say, the 200 series, and after that, half of the 500 series or something like that. There are 27 standards. So you can just divide your preparation into 3 to 4 parts over there. Right. Then apart from that, you need to look into these different types of audits over there. Right. So say you do some 5 standards, and along with that, you do the bank audit chapter. Then you do some more 5 standards and do the cooperative society chapter over there. Right. So bank audit, generally, how many questions? One question, or sometimes even we could see 2 questions in the paper. Right. Then cooperative society may or may not come. Company audit, yes, around 2 to 3 questions from company audit, and also caro is very trending right now. Right. Then audit of different types of entities, at least one type of entity could be asked over there. Items of financial statement, an important question. Very important over there, you also need to read regarding all the Schedule 3 disclosures. Right, you need to study about all the Schedule 3 disclosures, and then also we have the government audit chapter over there, and then all of this concept regarding audit, and so. Okay, right. So just as a warm up, or for us to begin with our discussion, right, can we discuss the applicability of the rotation of the company auditor? Okay, which companies are required to rotate their auditor? Yes. Let me see your answers in the chat box. Okay, is every company required to rotate their auditor, or is there an applicability of the rotation of the company auditor? Right. So what does it say? Listed companies, always applicable. Whenever a list of applicability is being prepared, who is the first one to stand in the list? Listed companies. Apart from listed companies, it says the unlisted public companies having the, yes, I'm waiting to see your answer. Paid up share capital of more than or equal to 10 crore. Yes, that is right. Right. Or the private companies, right? Or what does it say? The private companies having the paid up share capital of more than or equal to 50 crore. Or all the companies having the borrowings or deposits of more than 50 crore. Cannot appoint an individual for more than one term of 5 consecutive years. Cannot appoint a firm for more than 2 terms of 5 consecutive years. Right. So 10, 50 and 50. Right. 10, 50 and 50. And after they finish their 5 years or 10 years, then after that there is a cooling period of the 5 years. Right. There is a cooling period of the 5 years. Right. So rotation of the company auditor, to which company's rotation provisions are applicable. So always applicable to the listed companies. Then apart from that, unlisted public companies having paid up share capital of more than or equal to 10 crore, private companies having paid up share capital of more than or equal to 50 crore, all companies having the borrowings or deposits of more than or equal to 50 crore. Okay, right. Then what is the section 140 subsection 5? Does anybody know this one? Right, recently they are asking a lot about this one, section 140 subsection 5. What is it about? Yes, anyone? So many of you watching. So can you tell me regarding, is it anything coming to your mind? How 140 is regarding the removal of the company auditor. Who will remove the auditor of the company over here? By tribunal or by central government? Right? So it says the tribunal either suo motu, right? So removal of the auditor by the tribunal or the CG. So what does it say? The tribunal either suo motu or based on an application received from CG or any person concerned. The tribunal is satisfied. What is it satisfied? That the auditor of the company has acted in a fraudulent manner. Okay, oh my God, this auditor of company, big fraud, and acted in a fraudulent manner, or abated or colluded, that is assisted, participated in any fraud by or in relation to the company or its directors or officers, then the tribunal can order the company to change its auditors. Right, what does it say? If the application is received from central government and the tribunal is satisfied, then the order has to be passed within 15 days and the another auditor will be appointed by the central government. Such an auditor against whom the final order has been passed by the tribunal cannot be appointed as an auditor of any company for a period of 5 years, and he shall be liable under section 447. Right, so that is removal of auditor by the tribunal or the central government. Okay, can you tell me regarding the appointment of the first auditor in case of the government company? Right, the appointment of the first auditor in case of the government company. Who appoints? Within how many days they need to appoint? Can you tell me the provisions? If the first fellow doesn't appoint, then the second fellows, within how many days they need to appoint? If the second fellow does not appoint, then the third people, how many days within which they have to appoint? Yes, wonderful everyone. Right, what does it say? First auditor in case of a government company is to be appointed by the C and AG, the Comptroller and Auditor General of India, within 60 days from the date of registration of the company. However, if C and AG fails to appoint the first auditor within the 60 days, then the board of directors can appoint within the next 30 days. And what if the board of directors also fail to appoint the first auditor within the next 30 days? Then the members can appoint within the next 60 days at the general meeting. Right, so first power with the C and AG. If not, then board of directors. If not, then the members. Okay, right, then after that we also have the provisions over there regarding section 144. What is section 144? Right, which disqualification does it talk about? 144. Right, it talks about the disqualification under 141(3)(I). An auditor of a company directly or indirectly should not be providing the following services to company, to holding company, and to subsidiary company. Right, which services? What does it say? Other services to be provided by the auditor should be approved by the audit committee or the board of directors. But in this list of other services, what does it say? The following services can never be included. Right, which services can never be provided by the statutory auditor of the company to the company, holding company and subsidiary company? Accounting and bookkeeping, internal audit. Right, accounting and bookkeeping and the internal audit. Then design and implementation of the financial information system and the outsourced financial services. Then the investment advisory services and the investment banking services. Then the actuarial services, management services, and any other kind of services as may be prescribed. Right, so that is section 144. Auditor not to render certain services. Okay, yes, what is section 141(3)? It is regarding the disqualifications of the company auditor. And what is section 141 subsection 4? If any of the disqualification of the company auditor is attracted after his appointment, then the auditor shall vacate his office and such such vacation shall be deemed to be a casual vacancy in the office of the auditor. Right, so the auditor shall vacate his office and such vacation shall be deemed to be a casual vacancy in the office of the auditor. Okay, yes, can you tell me the exemption from cost audit? Central government will prescribe the companies which have to maintain cost records. Then central government will also prescribe out of those companies, which companies are required to get a cost audit done. Right, you have the 50, 25 and 135 regulated and non-regulated sectors regarding the applicability of the cost audit. And we also have the exemption from the cost audit. Okay, these entities, though you are maintaining the cost records, no need for you to get a cost audit done. Right, when is there no need? है ना, cost audit नहीं किया तो भी चलेगा, ऐसा कब होता है? Yes, cost audit not required to be done if operating in an SEZ, correct. Or if more than 75% of the revenue is coming from the exports in the foreign exchange, or it is engaged in the generation of electricity for captive consumption through a captive generating plant. Right, what does it say? Exemption from cost audit. No need to get a cost audit done. When no need to get a cost audit done? Operating in an SEZ, or more than 75% of the revenue is coming from the exports in the foreign exchange, or is engaged in the generation of electricity for captive consumption through a captive generating plant. Okay, right, that is regarding the exemption from the cost audit. Okay, yes, can we quickly revise the clauses of CARO 2020? Right, so first we have the applicability of the CARO over there, that CARO shall apply to every company, including a foreign company, except banking company, insurance company, Section 8 company, one-person company, and the small company. And private limited company, not being a holding or a subsidiary of a public company, paid up share capital reserves and surplus not exceeding 1 crore, right? Then borrowings not exceeding 1 crore, and total revenue as disclosed in Schedule 3 not exceeding the 10 crore, right? So for private limited company, 1 crore and 10 crore, right? These are the three limits: paid up share capital and reserves and surplus, then total borrowings, and then you have the total revenue as disclosed in Schedule 3. And that's the applicability of the CARO. And then after that, we have the 21 clauses of reporting in the CARO 2020. What is the clause 1? Clause 1. What is the number one asset of the company? Number one asset of the company is the property, plant, equipment. Yes, so that's the property, plant, equipment. So what is clause 1? Property, plant, equipment and the intangible assets. Right? Property, plant, equipment and the intangible assets. Whether the company is maintaining the proper records, whether physical verification has been conducted at the reasonable intervals, whether the title deeds of immovable properties are they held in the name of the entity, whether any revaluation has been done of the PPE or the intangible assets or both, and also the details of any proceedings which have been initiated or pending under the Benami Act. Right, under the Prohibition of Benami Transaction Act. Right, so clause 1, which is regarding the property, plant, equipment and the intangible assets. Right, so that is number one asset of the company. Right, then what is AS inventory, which is the accounting standard or the IND accounting standard for that? It is AS2 or the IND AS2. Right, so here also in CARO, what is clause 2? It is regarding the inventories and the working capital. Right, whether inventories have been physically verified by the management at the reasonable intervals, whether the procedures followed are they appropriate, and discrepancies of 10% or more are they properly dealt with in the books of account. And working capital, if the company has been sanctioned, yes, at any point of time during the year the company has been sanctioned, working capital limit in excess of on the basis of security of the current assets, then the quarterly returns and statements which have been filed with the bank's financial institutions, are they in agreement with the books of account? Right, so company has been sanctioned, working capital limit in excess of, yes, clause 2, inventories and working capital in excess of 5 crore, correct, right? Working capital in excess of the 5 crore, right? Then after that you have the clause 3 and the clause 4, right? So 3, we draw a tree over here, and what is there on the tree? 4 things are there on the tree: loans, investments, guarantees, and securities, right? So what does it say? Loans, investments, guarantees, and securities. You have to give the details of the transaction. And again, clause 4 is again loans, investments, guarantees, securities. You need to check the compliance with section 185 and 186. Right? So number 1, property, plant, equipment, intangible asset. Number 2, inventories. 3 and 4, LIGS. Right. Then what is clause 5? It is regarding the deposits from the public. So how many deposits has the company accepted from the public? Just for our example, we'll say 5 crore deposits. How much deposits have been maintained or accepted by the company? 5 crore. That is why clause 5. Right. Then how many cost records is the company required to maintain? The company is required to maintain the 6 cost records. That is why clause 6 is what? Cost records. That is why what is clause 6? It is regarding the cost records. Then how many statutory dues the company is required to pay on a regular basis? There are 7 statutory dues which the company has to pay on a regular basis. That is why clause 7 is the statutory dues. Right? Whether the company is regular in depositing the undisputed statutory dues and those which are outstanding for a period of more than 6 months from the date they became payable, and for disputed statutory dues, the amount involved and the forum where the dispute is pending. Right. Then how many times the company did not disclose their income? 8 times this company did not disclose their income. So that is why what we have clause 8, which is regarding the undisclosed income, right? What does it say? Where transactions have not been recorded in the books of account, have been surrendered or disclosed as income during the tax assessments under the income tax law, whether the previously unrecorded income, whether now it has been properly recorded in the books of account, right? So that is clause 8 regarding the undisclosed income. Then how many times did the company do the default in the repayment of loan or borrowing? 9 times there was a default and the repayment of the loans or borrowings, right? So what is clause 9? It is regarding the repayment of the loans or the other borrowings, right? So whether company has defaulted in the repayment of loans, borrowings to any lender, right? You need to give the details. Then how many times did the company come up with an issue? The company came up with an issue 10 times, right? So 10 times the company came up with the issue. So what is clause 10? It is regarding the issue proceeds, right? In your MCQs also you could be asked a question regarding the same, right? So 9 times default in repayment, 10 times they came up with an IPO, right? For the public offer, preferential allotment, private placement. Then how many times fraud happened? I think by now your mind would have started calculating. Okay, how many times did a fraud happen in the company? 11 times there was a fraud which happened in the company, right? So that is why clause 11, which is regarding the fraud. Right. Then at what time Nidhi was supposed to come to your place? Nidhi was supposed to come at 12 o'clock, right? So what is clause 12? It is regarding the Nidhi company. Right, whether Nidhi company, whether it has complied with the requirement of net owned funds to deposits in the ratio of 1:20 and at least 10% of the investments in the unencumbered term deposit, and whether there is any default in the repayment of deposits or payment of interest thereon. Right, then how many related parties are there of the company? The company has 13 related parties, right? So what is clause 13? It is regarding the related parties, right? Whether the transactions with the related parties, are they in compliance with 177, 188, and the details have been disclosed in accordance with the applicable accounting standards. How many internal audit report? Yes, everyone, tell me how many internal audit report? 14 internal audit report, right? So that is why what is clause 14? It is regarding the internal audit system, right? Whether the company has an internal audit system which is commensurate with the size and nature of its business. And what does it say? Whether the reports of the internal auditor for the period covered under audit, have they been considered by the statutory auditors? Right, then how many non-cash transactions the company has entered into? Company has entered into the 15 non-cash transactions, right? So what is clause 15? The non-cash transactions, are they in compliance with section 192? Right. Then on which date did the company apply to the RBI for registration? On 16th. Right. So what does it say? On 16th, they applied to the RBI for registration. So what is clause 16? It is regarding the registration with the RBI and the NBFCs. Right. Whether the company is required to be registered. Okay. Then how much cash losses was incurred in the company? You say, ma'am, 17 crore cash losses were there in the company. Right? How many cash losses were there in the company? 17 crore cash losses. That is why what is clause 17? It is regarding the cash losses. On what date did the auditor of the company resign? On what date did the auditor of the company resign? He resigned on the 18th, right? So what is 18th? It is regarding the clause 18. It is regarding the resignation of the statutory auditors. It is regarding the resignation of the statutory auditors. Then what does it say? How many material uncertainties are there regarding the ability to meet the liabilities? There are 19 material uncertainties. So what is clause 19? It is regarding the material uncertainty regarding the ability to meet the liabilities. Then how many CSR activities the company is involved into? The company is involved into 20 CSR activities, right? So that is why clause 20 is regarding the CSR. And then after that, how many companies are there in the consolidated financial statements? 21 companies. That is why you have clause 21, which is regarding the consolidated financial statements. Right? Is it right? Should we have a look at it once again? Right. So number one, asset of the company, property, plant, equipment, intangible assets. Then AS2, Ind AS2, clause 2, inventory, working capital. 3 and 4, LIGS, LIGS. 5, what does it say? 5 crore deposit. 6, cost record. 7, statutory dues. 8 times did not disclose the income. Then 9 times made a default in the repayment. 10 times came up with the issue proceeds. Then after that, what does it say? 11 times fraud. At 12 o'clock, Nidhi came. Then 13, related parties. 14, internal audit report. 15, non-cash transaction. 16, they applied to the RBI for the registration. On this, 17 crore cash losses. On 18th, the auditor of the company resigned. Then there are 19 material uncertainties regarding the ability to meet the liabilities, and then 20 CSR and 21 consolidated financial statements. Right? So everyone, is it good for you? The discussion regarding the CARO over here. Okay, right. Then after that, let us look into the contents of the audit report. Are you all with me? Contents of the independent auditor's report, right? Which auditing standard am I talking about? Hey, are you all with me? You started getting, you want to warm up like, oh yes, this is all what was there in audit. Oh yes. And every question, you don't know which out of this comes in the exam, and you don't try to go for selective important ones. What comes in your exam is important for you. You understand now? So whatever you study, ekdam concrete and ekdam warrior type preparation you should do for the exam. Soldier, warrior types. Okay. Right. Tell me, contents of audit report. Anybody by any chance? Do you think you know the contents of the audit report? You think you know? If you think, then tell me. Kya hai? What are the contents of the audit report? Yes? Starting with the... No? Yes? Okay. Right. Starting with the title. That is the independent auditor's report. Right? Starting with the title, which is the independent auditor's report. Right? Then after that, you have the addressee to the members of ABC Company Limited. Right? Then report on the standalone financial statements. And then after that, first paragraph over there, after the heading and addressee, is the opinion. Right? In the opinion paragraph, what do we write down? We have audited the accompanying financial statements of ABC Company Limited, which comprise the balance sheet, statement of profit and loss, cash flow statement for 31st March 2025, whatever, and the summary of significant accounting policies and the other explanatory information. And in our opinion, and according to the best of the information and explanation given to us, the financial statements give the information required by the Act and give a true and fair view. Right? So that's the opinion of the the auditor. Then, array auditor, on what basis are you expressing this opinion? So next paragraph over there is the basis for opinion paragraph. How many of you know the what is to be written in the basis for opinion paragraph? Just check with yourself. It's a good opportunity for you to, before revising, के how much you already remember. क्या लिखते हैं basis for opinion paragraph में? कि you are saying true and fair. Boss, on what basis are you saying true and fair? You say what? We have conducted our audit in accordance with, yes, the standards on auditing specified under section 143.10. Right, then you make a reference to that section of the audit report where the responsibilities of the auditor have been given. So you say we have certain responsibilities. Then after that you say we comply with the ethical requirements including independence. And what do you say? Okay, we believe. Auditor says, I believe. What do I believe? That the audit evidence that I have obtained is sufficient and appropriate to provide a basis for the audit opinion. Right? So this is the basis for opinion paragraph. Can this come as a separate question in your exams? Yes. Right? So title, addressee, opinion, basis for opinion. Then after that, what is the next content over there? Going concern, if any. So if there is any material uncertainty, and just as you have a material misstatement, here you have a material uncertainty, financial, operating, other indications regarding the going concern, due to which there is a significant doubt about the entity's ability to continue as a going concern, and adequate disclosures have been made in the financial statements, then you put this paragraph. And going concern, if any. So this para will not always come in the report. Whenever required, whenever there is a material uncertainty regarding going concern, it would come. Right. Then key audit matters, if any. So again, this paragraph will not always come. Whenever there is a key audit matter, you put this paragraph in the report. Right. Then after that, you have the management's responsibility. Yes. After going concern and key audit matter, what is the next content of the audit report over there? Management's responsibility. Yes, what is the responsibility of the management? The preparation of the financial statements in accordance with the applicable financial reporting framework. Then the design, implementation, maintenance of the internal control. Even that is the responsibility of the management. Then to ensure that the accounts of the company have been prepared on the going concern basis, again that is the responsibility of the management. Right, so you have the management's responsibility, right, the premise on which the audit is conducted, and management's responsibility, preconditions for an audit. Right, then after management's responsibility, you have the auditor's responsibility. What is auditor's responsibility? To obtain the reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. Right, reasonable assurance, and reasonable assurance is a high level of assurance, but it is not a guarantee that a misstatement will always be detected by the auditor. And then you have some additional points which are to be given in the auditor's responsibility paragraph, which either can be put in the main audit report itself, or you can put it as an appendix to the main audit report, or you can give a link of the website where these particular responsibilities have been mentioned. Like, we maintain an attitude of professional skepticism and we exercise professional judgment. We identify and assess the risk of material misstatement. We understand the internal controls in the company, internal financial control. We check for accounting policies and accounting estimates. Then we also check for going concern. Auditor is talking about his responsibilities. Right? Then the structure, presentation, content of the financial statements, and we also communicate with TCWG. Right? So these matters, either they can be put in the main report, or they can be put as an appendix to the main report, or a link can be provided. Right? So auditor's responsibility. Then after auditor's responsibility, you have the other reporting responsibilities. So other reporting responsibilities, 143 subsection 3. Right, the other reporting responsibilities, right, the reporting on other legal regulatory requirements. And then towards the end, you have the signature. right? Signature to be given along with three numbers: the membership number, firm registration number, and the unique document identification number. Right? Membership number, firm registration number, and the unique document identification number. Right? Then after that, the place of signature, and last one is the date of the audit report, the date after the financial statements are approved by the management and after the auditor has obtained the sufficient appropriate audit evidence. Right? What are these? These are the basic elements of the auditor's report. Right? These are the basic elements of the auditor's report. Okay. Right. Very important. One more thing we will study regarding the audit report. Okay, what are the two reasons as to why an auditor may modify his opinion? Okay, so one student is asking location of emphasis of matter and other matter. And emphasis of matter and other matter. Emphasis of matter, anything which is fundamental to the user's understanding, and other matter, anything which is relevant to the user's understanding. And what does SA 706 say? Okay, what should be the placement of these matters in the audit report? It says as deemed appropriate. Right, so there is no fixed location given for these two paragraphs in the report. It says, auditor, you apply your professional judgment, you know where they can be put in the audit report. Okay, generally it is so seen that you put title, addressee, opinion, basis for opinion, going concern, emphasis of matter, key audit matter, other matter, generally. But there is no hard and fast rule. And generally, this is how it can be given. Like other matter can come after other reporting responsibilities also, because anyways it says as deemed appropriate. You get it? Okay. Right. Then after that, management's responsibility, auditor's responsibility, other reporting responsibilities, and signature, place, and date. Okay, right. So anyways, now let us come to, yes, the modifications to the opinion. Very important one now, because at the end of the auditing standards also you require this one. And whenever you find out that there is some problem with the expression, you cannot give a clean report with the expression of the opinion. Right. So modifications to the opinion in the independent auditor's report. You know, like, okay, some complicated, some very difficult question, offbeat from the nook and corner of the book came and you had not revised it and you don't know the points and that you cannot write. Okay, like understood. Should not be the case, but not, you don't know, it's okay. But boss, they ask you regarding types of modified opinion, or they ask you some correct and incorrect regarding qualified opinion or disclaimer of opinion, that is limitation on scope, and you're not able to write the answer, then no, then that's injustice in your preparations. That's what I told you. Know what you know, you should know it rock solid. इतना कंफर्म करके जाओ कि if you do company audit, rock solid, firmly. Okay, any answer, let it come, I will be able to write. If I write, like, you have to write the entire 100 marks of the paper, but you should have that confidence that whatever, even though if I whatever 50 marks I have written, from that also I will get 40 marks. So if you write 100 marks, accordingly you should be confident about securing those many marks. Okay, that confidence, you know, it's not that you're only studying today and tomorrow. You've been studying all these months and years. You understand? No. So now the difference, the finishing touch is going to come with your confidence and your firmness in the preparation for the exams. Okay, right. Anyways, we are talking about the modifications to the opinion in the independent auditor's report. Right? When the auditor modify his opinion? One, when there is a material misstatement, right? When there is a material misstatement, right? Material fraud or error. Then for this material misstatement, we need to check whether it is pervasive or whether it is not pervasive. If there is a material misstatement and it is not pervasive, okay, it is material but it is not pervasive, then in that case, auditor, what type of opinion will you express? Yes, I am waiting to see the answers. What type of opinion? Auditor has obtained the sufficient appropriate audit evidence. Okay, there is a material fraud and error. It is material, but it is not pervasive. So in that case, auditor, you will issue a, yes, everyone, absolutely right. You will issue a qualified opinion. Financial statements give a true and fair view except for the effect of the matters. right? Or except for the possible effect of the matters described in the basis for the qualified opinion paragraph. Okay, right. Then again, what is situation 2? Is there a material misstatement? Yes. Is it pervasive also? Yes, it is pervasive. It is affecting the overall financial statements. It is not restricted to one element item. It is not confined. It is overall. Right, so now it is material and it is also pervasive. So in that case, auditor, now you will have to express an adverse opinion saying that the financial statements do not give a true and fair view. And the auditor is what you say, the financial statements do not give a true and fair view because of the matters described in the basis for adverse opinion paragraph. Okay. Right. Second reason as to why the auditor modifies his opinion is when there is a limitation on scope. Right, when there is a limitation on scope, right? So they are telling you not to check inventory, not to check debtor, not to check share capital, not to check investment. They are restricting the scope of your audit. So now for this restriction on the scope of the audit, again what is happening? You are unable to obtain the sufficient appropriate audit evidence. You are unable to obtain. What is USAAE? It is unable to obtain what? The sufficient appropriate audit evidence. Whatever is that matter for which you are unable to obtain evidence. Is it material? Yes. And is it pervasive? You say no. It is not pervasive. It is not related to the entire financial statements. Right? So in that case, again, auditor, you will issue a qualified opinion, true and fair view, except for the possible effect of, right? So whenever it is not pervasive, you will always issue a qualified opinion. And unable to obtain sufficient appropriate audit evidence, so much of evidence you've not obtained. Okay, it is material and it is also pervasive. So in that case, auditor, you will not express an opinion, rather you will give a disclaimer of the opinion that we are not in a position and we do not express an opinion on the financial statements, right? We are not in a position and we do not express an opinion on the financial statements, right? So these are the three types of the modified opinion: qualified opinion, adverse opinion, and the disclaimer of opinion. When do you issue qualified opinion? Material misstatement, material but not pervasive, or unable to obtain sufficient appropriate audit evidence, material but not pervasive. Right? Adverse opinion, material misstatement, material and pervasive. Right? And disclaimer, unable to obtain sufficient appropriate audit evidence, which is material and pervasive. So in that case, auditor, you will issue the disclaimer of the opinion. Right? You will give a disclaimer of opinion. Okay. Right. Then after that, now tell me, let me ask you a question. What and all are covered in this revision till what time, right? So the session will be till 9 o'clock and we'll be just having an overall discussion of the important questions. So if you want me to cover any particular topic or chapter, you can just let me know about it. Okay, right. So anyways, I have a question for you over there. Okay, what are the factors to be considered in the development of the joint audit plan? Joint audit, is anything coming to your mind? Joint audit, which essay? Any essay is coming to your mind? Essay 299. Great. Joint audit of the financial statements. Right. So what are the matters to be considered in the development of the joint audit plan? One, the joint auditor shall by mutual discussion decide upon the division of audit areas and the common audit areas. Right. Division of audit areas and the common audit areas. Right. Then after that, what does it say? Right. So joint auditor, when they are preparing the joint audit plan, they need to consider the reporting objectives of the engagement. Right. They need to consider the reporting objectives of the engagement. Right. Then they also need to consider the characteristics of the engagement that define its scope. Right. The characteristics of the engagement that define its scope. Right. Then also they need to consider which areas significant effort is to be put by the members of the engagement team. Right. So engagement team members are not going to put equal effort in all areas. right? So professional judgment as to which area significant effort would be put by the members of the engagement team. Right, then also what they need to consider, the results of the preliminary engagement activities, right, which you do as per SA 300, the preliminary engagement activities, right? And the last but not the least, the nature, timing and extent of the resources required to perform the engagement. Right? So how will the joint auditors decide on the division of work? By mutual discussion. Then what are the factors, further factors to be considered in the development of the joint audit plan? Okay, what are the reporting objectives? Based on the reporting objectives, you will decide, about your scope of audit. Based on that, you will decide which area, how much effort. Then you also need to consider the results of the preliminary engagement activities, and you also need to decide upon the nature, timing and extent of the resources required to perform the engagement. These 2 to 6 same points are there in SA 300, but there these are the points for the development of the overall audit strategy. But when it comes to SA 299, it becomes the joint audit plan. In SA 300, they are given under overall audit strategy, and in SA 299, they are given under the joint audit plan. Right? They are given under the joint audit plan. Is it clear to all of you? Okay, right. Then after that, one more. So this is a question which has been asked once, could be asked again regarding the joint audit plan. Okay, right. Then after that, we have a question in SA 580. What is 580? Let me see your intelligence. You'll say, ma'am, this is basic question. No, so silly mistakes also should be avoided. No, so what is SA 580? क्या है? Yes, written representations. Amazing internet connection. है ना? फटाफट you are giving the answers. Written representations. है ना? What does it say? Representations by management to confirm certain matters or to support other audit evidence. है ना? To confirm certain matters or to support the other audit evidence. It is not the main audit evidence. It is the necessary audit evidence. It is what you say, corroborative audit evidence. And now what is happening? Management's refusal. This is again a favorite question at intermediate level. Management's refusal to provide the written representation. What is management telling auditor? Will not give you written representation. Management's refusal. See, towards the end of the audit, should I obtain the written representation from the management? Yes. And now management is telling auditor, no. No, auditor, we are not going to give you rep. MRL, management representation letter. We are not going to give you WR, written representations. What you'll say, okay, no problem, I'll manage. No, what you'll do? Favorite thing of the auditor. What is favorite thing of the auditor? Discuss. Correct. Discuss. Management, what happened? Why you are not giving written representation? And now, asking them to give written representation, and these fellows, they are not ready to give you the representation. Certainly you will have doubts, absolutely right, regarding the integrity of the management. There is something wrong with the management of the company. That is why they are not giving the written representation. And ultimately, if they don't give the written representation, it will constitute a limitation on scope. And what do you do to do a limitation on scope? You either issue a qualified opinion, or you may issue a disclaimer of opinion, or you may decide to withdraw from the engagement, right? So ultimately you come to SA 705, which is regarding the modifications to the opinion in the independent auditor's report. Is it clear to all of you? Okay, tell me SA 560. And this is nowadays they are asking this question. And SA 560 is regarding the subsequent events. And in that subsequent events, one part of the definition says that subsequent events also includes facts that become known to the auditor after the date of the auditor's report. And facts that become known to the auditor after the date. Matlab, I issued audit report. After that, I come to know a fact. Oh, the company is getting amalgamated, the High Court order has come, or in the comparative information there is a misstatement, something interesting. You come to know there was a fraud which had happened in the company for the period which I have given my audit report. something you come to know after the date of the audit report. What to do? What to do? Yes, again, what did I tell you? Favorite thing of the auditor. What is it? Discuss. Absolutely right. What does it say? Discuss the matter with the management. Right. Then after that, what does it say? Determine whether the financial statements need the amendment. Okay, whether you need to reopen the financial statements and take into consideration that amendment. Right. So determine whether the financial statements need amendment. If they don't need amendment, no problem. They need amendment. But can you amend financial statements? No, you'll have to ask management, fact has happened, please amend your financial statements. Right? So inquire as to how management intends to address the issue. Right? Inquire as to how management intends to address the issue. Right? So discuss the matter, determine whether the financial statements need amendment, and inquire as to how management intends to address the issue. Okay. Tell me, what are the principles of financial propriety? Some students saying, like, they are asking which chapter will be covered. Did you see that there is no particular chapter being covered? We are just going around the entire syllabus. And should we do it this way? Rather, it has to be done this way. Tomorrow exam, question number 4A, government audit, question number 4B, SA 560, question number 4C, CARO, and question number 4C, D is regarding audit program. Full variety, full mixture of question. There you cannot say, ask me chapter wise. ऐसा तो नहीं होगा. Okay, right. So principles of propriety audit, the norms, the standards, the principles of financial propriety. What is propriety? Expenditure should not be, yes, what does it say? Unnecessary, improper, avoidable expenditure. Right? So for that, you look into the public financial morality by looking into the wisdom, the faithfulness, and the economy of the transaction. Simple, there should be no unnecessary expenditure. How do you come to know कि ये expenditure necessary है कि unnecessary है? कैसे पता चलेगा? How will you come to know कि this expenditure correct or this expenditure not correct? Expenditure, what is the principle? What is the standard of financial propriety? Expenditure should not be, yes, prima facie more than what the occasion demands, right? So the occasion demands you to buy 2 laptops, then only buy 2 laptops, no need to buy 1,000 laptops, right? So expenditure should not be prima facie more than what the occasion demands. Then no authority should exercise power which is directly or indirectly to its own advantage. And no authority, like they are using the power for their own benefit. And no, it should be used for the benefit of the community. Right? So what does it say? No authority exercises the power for its own advantage. Then it says the public money. It's public money. Now it is not your interest, what you say, your private money over there. Right? So what does it say? Public money should not be utilized for the benefit of a particular section or group of persons or so. And last one, the allowances given to the government employees should not be a source of profit to the recipients. Right? Whatever allowances are given, that should not be other income for the government servants, right? For the government employees. They should not be a source of the profit. Right? So what are these? These are the principles of financial propriety. Prima facie, it should not be more, no misuse of power, public money should not be utilized for the benefit of a particular person or community, and the allowances given to the government employees should not be a source of profit to the recipients. Next one. Unless and until I get an answer for this one entirely in the chat box, I'm not going to say anything. Henna. If you know it today, you'll know it in the exam hall also. Right, audit of government expenditure. Fatafat, quickly, tell me. Then we'll go to bank audit. One student has asked bank audit. So kar lete hain. Kar hi lete hain na. CA final, no? You want to go into CA final, right? Yes, you'll write good paper, right, everyone? Positive, absolutely confident. Okay, bolo. Audit of government expenditure. So much expenditure, na? Government incurs G20 summit and Azadi Ka Amrit Mahotsav and so much expenditure. Yes, so another roads, railway, so much of expenditure of the government, right? The audit of, yes, started in a fatafat writing in the question bank. This is how you'll write in the exams also. Okay, very good. Quick typing over there, right? Audit of the rules and orders, that whether government expenditure has been incurred in accordance with the rules, regulations, orders which have been issued by a competent authority, and a competent authority. Then whether the government expenditure has been sanctioned by the, yes, as per the sanctioning powers which have been given to the by the competent authority, right? Whether it has been sanctioned by the competent authority, right? Then whether the, yes, provision of funds has been made, and whether the expenditure has been, expenditure has been made, provision of funds have been done for the expenditure, and the providers say the actual expenditure does not exceed the appropriation made. And the actual expenditure does not exceed the appropriation made, right? Then after that you have the propriety audit, to find out cases of improper, avoidable and the wasteful expenditure. And last one is the performance audit, to check the efficiency, economy and the effectiveness of the operations, right? That is the performance audit. That is the audit of the government expenditure. And the rules and orders, audit of the sanctions, audit of the provision of funds, audit against the provision of funds, the propriety audit and the performance audit, right? And the performance audit. Okay, right. What are the objectives of the audit of local bodies? Right, what are the objectives of the audit of the local bodies? Right, local bodies, gram panchayat, municipal corporation, cantonment, zilla parishad. What are the objectives of the audit? Reporting on the fairness of the presentation of the financial statements. Then reporting on the strengths and weaknesses of the financial systems, the financial controls. Right, then also checking whether they have followed the legal administrative requirements, and whether they have adhered to the legal administrative requirements. Right, then also what you need to check, detection of any fraud, error or the misuse of the resources. Right, fraud, error or the misuse of the resources, and whether value has been fully received for the money spent. Right, whether value has been fully received for the money spent. Okay, right, these are the objectives of the audit of the local bodies. Okay, right, then just to give you a piece of information, that there are a few MCQs which are being uploaded on the Telegram channel of the Aarti Lahoti, and then we also have an Aarti Lahoti audit learning app. So even on that free, you can just solve the MCQs over there free of cost. You just need to download the app, and that could just be a quick help for you to prepare for the exam. So if required, if you find it beneficial, you may utilize the same. Like if it says dash along with other disciplines such as accounting and law, equips you with all knowledge required to enter auditing as a profession, right? So what does it say? Auditing. And the moment you give the correct answers, there is bursting of crackers which happens over there, right? So as per 710, if auditor changes his opinion regarding previous year as reported in the auditor shall specify the fact in the, let's try other matter paragraph. Yes, it will specify it in the other matter paragraph, right? Then separate financial statements of previous year are given. That means it is the comparative financial statements. Then the matters which the banks require their auditor to deal with in the LFAR is to be specified by the Banking Regulation Act, Central Government, CNAG, Reserve Bank of India. So they are specified by the RBI, right? That is the Reserve Bank of the India, right? They have been specified by the RBI, right? The matters to be reported in the LFAR. Judging the significance of a matters requires facts of the circumstances. Obviously, objective analysis, subjective analysis, qualitative. No, it requires the objective analysis, right? What does it require? It requires the objective analysis, right? So rest of them, I don't want to, open the suspense for you. You can try solving them on your own. Okay, right. So that is one thing I wanted to tell you. And now let's quickly come to the chapter of the bank audit, right? So let's come to the chapter of the bank audit, right? So I'm using the 7th edition of the book for reference. Whichever book material or institute study material with you, even that is going to be absolutely fine as long as you prepare the content well. Right, so let's come to the chapter of the bank audit. Okay. over here. Right, we have the types of banks which have been given over there. Right, so there are different types of the banking institutions, right? So wherein you have the commercial bank, then the regional rural bank, right? So commercial banks, they accept deposits and grant the advances. These are for the general public, that is open for all. Regional rural bank are mainly for the rural communities, right? Set up in the rural areas. Then you have the cooperative banks which have been set up under the cooperative principles and registered under the Cooperative Societies Act, right? Then the payment bank which are allowed to accept the restricted deposit, but they cannot give the loans and the credit card, right? That's a new type of bank which has come, which is the payment bank. Right? Then you have the development banks which mainly gives the loans or the funds for the infrastructure purposes. And then you have the small finance banks which gives the loans, the banking facilities to the unserved and the unorganized sectors like the small marginal farmers, the small micro business units, etc. Right? So what is this? This is regarding the This is regarding the types of the banks. Okay, then what do we have? The peculiarities, understanding of the computerized system, regulatory framework. Then who is the boss in case of the bank? Right, who is the boss? It is the RBI. So what is the link of the telegram? You can just put Aarti Lahoti Audit Learning. I think you'll be able to find it, and it's there in the description also. So you can take it from there. Okay, right. So who is the boss in case of the bank? It is the RBI. It is the regulating body in case of the bank, right? So what are the functions of the RBI? Issuance of the currency, then regulation of the currency issue. So 2 points regarding the currency. Then acting as a banker to the central and state government, then acting as a banker to the commercial and other types of bank, and also they regulate the activities of the commercial and the other banks. Right, so what are these? These are the functions of the RBI. Can it be asked as a separate question in your exams? Yes. Right. Then after that you have the provisions regarding the appointment of the auditor. Okay, कौन appoint करता है? So this is very important from the MCQ viewpoint. Who appoints the auditor? So it says generally, just like any other company, bank is also a company only. So the auditor will be appointed by the shareholders in the general meeting. However, in case of a nationalized bank, the auditor will be appointed by the concerned bank acting through its board of directors, right? So generally, like ICICI Bank, the auditor will be appointed by the shareholders, but Punjab National Bank, the auditor will be appointed by the board of directors. Okay, in either case, whether appointed by shareholders or board of directors, the approval of the RBI is required. Right. Then it says the auditors of the State Bank of India. State Bank of India, what does it say? They are to be appointed by the CNAG, the Comptroller and Auditor General of India, in consultation with the central government, right? So now in consultation with the central government. Then the auditors of the subsidiaries of State Bank of India are to be appointed by the State Bank of India. And what does it say? The auditors of the RRB, the Regional Rural Bank, are to be appointed by the concerned bank with the approval of the central government. Okay, right? So these are the 6 points which you need to remember regarding the appointment of the auditor. Right? Then what is the audit report to be issued by the auditor? Then the LFAR, right? We just studied an MCQ that the format of the LFAR has been given by the RBI, and by what date is the LFAR required to be submitted? It is to be submitted before 30th of June every year. Right? It is to be reported before 30th of June submitted before 30th June every year. Right. Then what does it say? Any banking fraud, what does it say? You need to report the matter to the member, shall be required to report the kind of matters as stated in the RBI circular. And in addition to reporting to the matter to the RBI, you also need to report the fraud to the chairman, managing director, chief executive director of the concerned bank. Right, so other companies, what we do, fraud reporting, we do it under clause 11 of CARO. But banking companies, CARO not applicable. Right, so here to whom the fraud reporting is required to be done? The fraud reporting is to be done to the RBI. Okay, right. Then after that you have the bank audit approach. Okay, this is a favorite question of ICAI at the intermediate level, which is regarding the ETD, the engagement team discussion. So you are like, oh my God, so interesting. I'm going to go for doing a bank audit. So it says, wait, before you actually start with the bank audit, there should be a discussion amongst the members of your engagement team. Right? So why? It says, kya hoga ye discussion karke? So it says this discussion provides for the more senior experienced members. It gives them an opportunity to share their insights with the less experienced team members. And it also gives an opportunity to exchange information about the bank's business risk. And it also helps giving an understanding amongst the team about the effects of the the risk assessment procedures and regarding the further audit procedures. Right, so insights, information, and also the results of the RAP and the decisions regarding the FAP. And the results of the risk assessment procedures, okay, what RMM have been identified, and the decisions regarding the FAP. That is what further audit procedures are to be performed. Right, then this discussion also provides regarding the discussion regarding the susceptibility of the bank's financial statements to material misstatement. Okay, where all there is a possibility that there could be a material misstatement. And last one, obviously, when is this discussion to be done? It is to be done at the planning stage of the audit. Right, ETD, the engagement team discussion, is to be done at the planning stage of the audit. Okay, then what do you discuss? What are the matters which are discussed in this engagement team discussion? So what does it say? It provides an opportunity to share the insights, to exchange information, then results of RAP and decisions of FAP, then after that the susceptibility, then planning stage of the audit. But what does it say? What do they discuss? So one, errors which are likely to occur. So what may happen? Future frauds. Right. Then errors which are identified in the prior year. So whatever are the past frauds. So future frauds and the past frauds. Then how the fraud could be committed. So methods by which fraud may be perpetrated by the bank personnel. Then what are the responses to that? Engagement risk, pervasive risk, and the specific risk. Then if you see that there is the risk, what you need to do? You need to maintain professional skepticism. That is, you need to remain alert for the information. Right, so that is what are the matters to be discussed in the engagement team discussion. And then what are the advantages? You know, regarding where all there is a chance of fraud and a susceptibility of fraud. Then accordingly you decide to which member of the engagement team which work is to be delegated. And you say, array, there is nobody in our team who can do this work. Then you can decide to involve the specialist. Right, then in that case, what you can do, you can decide to involve the specialist. Right, so that's an important discussion over there regarding the engagement team discussion. Right, then you have the bank audit process, right, the entire steps involved in conducting the bank audit, and then you have the advances of the bank. Right, so very important discussion regarding advances, income and expense of the bank. Right, so what does it say? The advances, that is, you know, I say that I have taken a loan from the bank, but what will the bank say? That we have given an advance to our customer. Right, so this advance, it could be a funded advance or it could be a non-funded advance, funded or non-funded. Funded, which involves the actual transfer of the funds, and non-funded, which does not involve such a transfer. Right, and then you have the legal requirements for the disclosure. Right, so what does it say? Bills purchased discounted, cash credit, overdraft, loans repayable on demand, and the term loan. So that is BCU. And bills purchased discounted, sorry, BCT. Right, the cash credit, overdraft, and then you have the term loans. And then SCU, secured by tangible assets, covered by bank government guarantees, and the unsecured. Right, so BCT, SCU, and then next classification, advances in India and advances outside India. Right, in India and outside India. Okay, right, then after that it says this advances which are given by the bank, they could be secured or unsecured. Right, secured, it says that there has to be a primary security and there has to be a collateral security. What is primary security? It is the principal security against which the credit has been extended by the bank. And collateral, it is the additional security. Right, so principal security, it is the it is the main security against which the credit has been extended by the bank, and collateral, it is the additional security. Okay, right, and then after that, what are the ways in which the mode of creation of the security? Right, so what is the mode of creation of the security? Mortgage. कुछ आ रहा है दिमाग में कि नहीं आ रहा है? Okay, please give brief discussion for audit of items of financial statements. So we can do that also. I think then after that we'll be done with the time for today. Let's see. So mortgage, registered mortgage, equitable mortgage, generally for immovable properties like land, building or so. Right, then after that pledge, pledge, generally you can pledge your shares with the bank or so, right, your gold or so. Right, then after that you have the hypothecation, which is generally done for the inventory, where neither the possession nor the ownership is transferred to the bank. Right, so that's the hypothecation. Then assignment, whatever future debt of yours, you assign it to the bank, right? So assignment of the debtors or so. Right, then after that you have the set off, that whatever balance you have in your advance, or what you say, deposit account, that can be adjusted against the advance, right? And that one is the lien, right? So what do you say? Liquidating, disposing of the property of the other person to recover the money, right? So what are these? These are the mode of creation of the security. What are these? These are the mode of creation of the security: mortgage, pledge, hypothecation, assignment, set off, and the leave. Okay. Right. Then after the mode of creation of the security, the next discussion, right, which we have over there is regarding the prudential norms, right? So generally, when does an asset of a bank become a non-performing asset? When it is overdue for more than 90 days, right? So what is the critical number over there? It is 90 days. So overdue for more than 90 days. Or what does it say? CC overdraft when it gets the out of order status. When does CC overdraft get the out of order status? One, when there are no credits continuously for 90 days, or it has exceeded the sanction limit, or credits are not enough to cover the interest debited during the same period. Like credits are not enough even to cover the interest debited during the period, right? So that is the out of order status. When does a CC overdraft get an out of order status? No credits continuously for 90 days. Or what does it say? It has exceeded the sanction limit, or the interest credit debited during the period. The credits are not enough to cover even the interest debited during the period. Okay. Right. Then after that, the provisioning for the NPA: for substandard asset, 15% provision; for loss asset, 100% provision. And for doubtful, you need to check whether it is secured or unsecured. If it is unsecured, always 100% provision. And secured, then up to 1 year, 1 to 3 year, and more than 3 year. 25%, 40%, and the 100%. Right? 25, 40, and the 100%. Okay. Right. Then accounts regularized near about the balance sheet date. Right? So you need to check whether the recovery has been done from the genuine sources and there is no inherent weakness on the basis of data available. You say just because it is 31st March they have paid, come the month of April and same old story. Right? So genuine sources. Then central government guaranteed advances need not be treated as an NPA, even though if they are overdue for more than 90 days, till the time the guarantee has not been repudiated when invoked. So not cancelled when presented, it says it need not be treated as an NPA. However, this does not apply to the state government guaranteed advances, right? It does not apply to the state government guaranteed advances. Then accounts where there is an erosion in the value of the security. What does it say? More than 50% erosion, straight away to be classified as the doubtful asset. And more than 90% erosion, then straight away to be classified as the loss asset. Right, then advances against the term deposits, NSC, IVP, KVP need not be treated as an NPA. Right, agricultural advances, what does it say? Long duration crops overdue for more than 1 crop season, and short duration crops overdue for more than more than 2 crop seasons. And then what does it say? Advances to the staff. This question has been asked in the MCQ. Right? What does it say? The staff advances by a bank as an employer and not as a banker are required to be disclosed under the subhead others under the schedule of the other assets. Right? So you will not show it under your advances. You will show it under the others. Right? It will be shown under the others, the advances to the staff. Right? Agricultural advances, short duration crop overdue for more than 2 crop season, long duration crops overdue for more than 1 crop season. Okay, right. This is an important one. Computation of drawing power, around 6 to 8 mark question has been asked in the exam. Like the computation of the drawing power. So what does it say? Computation of the drawing power, it is done for the basis of the, if they decide the cash credit which can be availed from the bank financial institution, right? And then you also have the sanction limit. So one you have is the working capital limit, and then you also have the sanction limit. What is working capital limit? That is for the current, the cash credit. And sanction limit is the total exposure that a bank can take on a particular client for cash credit, overdraft, export packing credit, non-funded exposure, etc. Right? So what does it say? The drawing power limit, working capital limit, and the sanctioned limit. What does it say? An account should be kept within both. It should be kept within the sanction limit also, and it should be kept within the drawing power also. On what basis do you calculate the drawing power? Drawing power is calculated on the basis of the current stock statement. Right, so up to current stock statement. So it says it should not be older than 3 months. If it is older than 3 months, it will be deemed as the irregular. Right, so you need to check the quarterly returns and statements which have been submitted to the bank. Those should be scrutinized in detail. Right, then again the board of directors will be having the guidelines regarding how the computation of the drawing power is to be done. And in case if the stock, what you say, the funded exposure is more than 5 crore, then a stock audit is also required to be done. Right, so computation of the drawing power. What does it say? Right, cash credit, it is the working capital limit. Then you also have the sanction limit, which is the total exposure. Then an account should be kept within both. It should be kept within the working capital limit also and the sanction limit also. So say as per the stock statement, as per the latest stock statement, your working capital limit is coming to 50,000. But say your sanction limit is only 40,000. Overall, total exposure, bank said in your case, we cannot have more than 40,000. So now what is the maximum amount of working capital limit which can also be given? It is only 40,000. Why? Because an account has to be kept within both. Working capital limit also and sanction limit also. Say working capital limit is 50,000 and sanction limit is 1 lakh. Then in that case, how much is the working capital limit? It says 50,000 because it has to be kept within both the working capital limit also and the sanction limit also. Okay. And how do you calculate the working capital limit? On the basis of the stock statement. And this stock statement should not be older than 3 months. If it is older than 3 months, then it is deemed as irregular. Right? Then the BOD will be having the guidelines regarding the computation of the drawing power. And again, stock audit if the funded exposure is more than 5 crore. Okay. Right? Then you have the internal controls over advances, the audit procedures for the audit of the advances. Okay, as an auditor, how you do the audit of the advances. So it is the amount which is outstanding on the balance sheet date. It is the amount which is due to the bank. There are no unrecorded advances. Then whatever advances have been given, you need to check the loan documents, the valuation, right? The disclosure, classification and description. And then also based on the valuation, the provision. Right? Also based on the valuation, the provision. And then again it says auditor, you carry out the substantive procedures. All large accounts to be checked, whereas small accounts, other accounts to be checked on a sample basis. Then you also need to check the problem accounts, right? What is the large advance over there? Excess of 2 crore or 5% of the aggregate advance, whichever is less. Right, excess of 2 crore or 5% of the aggregate year-end advance, whichever is low, I guess whichever is less, and also accounts which have been adversely commented by the RBI. Right, so here they talk about the large advances, then they talk about the problem advances, then they talk about the adversely commented upon advances. Okay, right, then you have the income of the bank. Right, so income of the bank, what are the different interest income and the other income of the bank? And then as an auditor, how you do the audit of the income of the bank? Right, so how you do the audit of the income of the bank? Right, one, you need to obtain the reasonable assurance that the income of the bank has arose from those transactions which have taken place during the period pertain to the bank. There is no unrecorded income and the income is recorded at appropriate amount. Right, so you need to check the OCACC, the occurrence, completeness, accuracy, cutoff and classification, right, of the income, and you need to obtain the reasonable assurance, right, regarding the income of the bank. Then what does it say? If the income is exceeding 1% of the total income, then it should be recognized on the accrual basis. If it is less than 1% of the total income, then it can be recognized on the cash basis. It can be recognized when received. Right. Then what does it say? If there is what does it say? If there is certainty regarding the ultimate collection, it is not unreasonable to expect its ultimate collection, then it should be recognized on the accrual basis. However, if there is a significant uncertainty regarding the ultimate collection, then again it should be recognized on the cash basis. So more than 1% of total income, accrual basis. Less than 1% of total income, cash basis. There is no significant uncertainty regarding ultimate collection, accrual basis. There is significant uncertainty, cash basis. 5 point हो गए? नहीं हुए? हो गए ना? No? What were the points? Reasonable assurance, है ना, properly recorded. Then 1%, less than 1%. Then certainty, uncertainty. Is it right? right? Certainty and the uncertainty, right? Then after that, what are the further points? Advances against the securities taken to income account on the due date, provided there is adequate margin, right? So because these are not to be treated as an NPA, advances against the securities of term deposits, NSC, and so. Bills purchased, the income is to be apportioned between the 2 years. Bills for collection, the income is to be recognized when the amount is actually collected, and renegotiation fees are to be recognized on the accrual basis, right? Renegotiation fees are to be recognized on the accrual basis. Okay, right? So that is the income of the bank. And after the income of the bank, what you also have is the expenses of the bank. So you have the interest expense, the operating expenses, and the provisions and the contingencies. Interest expense, then the operating expenses, and the provisions and the contingency. So first one is the audit of the interest expense, then you have the audit of the operating expenses, and then last one you have is the audit of the provisions and contingencies, right? Audit of the provisions and the contingencies. So now audit of the interest expense. Again, over here, what you want to check? The overall reasonableness. In income, we said reasonable assurance. Here we are saying overall reasonableness of the interest expense. Right? Again, what you need to check whether it is automatically generated through a batch process in the core banking system, right? The core banking solution system of the bank. Right. Then what does it say? You want to check the interest expense. So for that, you can calculate the weighted average interest rate. Then that average rate of interest, you can compare it with the previous year and analyze any material differences. वो हमेशा आंसर में लिख सकते हैं कि you calculate the amount and you what you say compare it with the previous year. And you're doing an analytical procedure in that case. And so overall reasonableness. Then you calculate the weighted average. The auditor may work out the weighted average interest rate. Then what does it say? The average rate of interest, and you compare it with the previous year. Then you analyze in month on month and the average balances. Then it says test check. What is test check? Sampling basis. And what does it say? Interest has been provided on all the deposits. Then what interest rates are in accordance with the bank's internal regulations, the RBI directives, agreements with the respective deposit holder. Then the interest on savings account and the interest on the interbranch balances. Right? So that is test check the calculations, that it has been done on all the deposits, then the rates, then the interest on savings account, and the interbranch balances. And then any change in the interest rate, whether it has been done as per the interest rate card of various types of deposits, the completeness and the recomputation of the interest accrual. Right, so change in interest rate. This one they asked us a question, no, audit of operating expenses. As an auditor, you have been appointed to do the audit of some bank. Can the name of the bank be some bank? Yeah. And then it says you have to do the audit of the operating expenses of the bank. As an auditor, what are the considerations while doing the audit of the operating expenses of the bank? Do you say operating matlab bank also has advertisement to be done. They also have printing and stationery. They also have repairs and maintenance, operating day-to-day expenses of the bank. Right? So one, what does it say? Internal control, authorization procedure. Then again you compare it with the previous year and check whether there is any major items of the expenses, right? Then again the reasonableness of expenses by comparing them with the previous year, right? So whether there is any divergent trend, then you also compare it with the previous year, and whatever expenditure has been incurred, show us the supporting documents. Verify expenses with reference to the supporting documents, right? So audit of the operating expenses of the bank. कैसे करें? Internal control system, authorization, diverging trend, reasonableness by comparing it with the previous year, and then verify the expenses by checking the supporting documents. Okay, right. Then audit of provisions and contingencies. So now provision, what does it say? One, you need to ascertain compliance with the regulatory requirement. Then you need to understand how the bank computes the provision for the standard asset and the non-performing asset, right? NPA. Then the basis of the classification of the asset, whether it is proper. right? So you need to check the loan classification on a sample basis. Then loan classification standard, non-performing loans, whether they agree with the balance, general ledger, right? Whether the balances, whether they agree with the general ledger. So this is all regarding the provision for the NPA. And then it says the tax provision, you need to obtain the computation, and provision for expenses, you need to check the circumstances and the adequacy, right? You need to check the circumstances and the adequacy. And voluntary disclosures for the prior period item, it is not required as per the banking regulation law, but wherever required, they may be given. Seriously, can you believe it that we have had a look at such a gigantic chapter over there, which is the audit of the banks? Can you believe it? Income of the bank, expense of the bank, advances of the bank, then also the appointment of the auditor in case of the bank. Right, then we studied regarding the beginning, I guess, whatever the functions, important functions of the RBI, what are the types of banks and so. Okay, right. So on demand, now let's go to another chapter though over there, which is the audit of the items of the financial statement. Oh my God, that is like one crazy big chapter over there. Okay. So now what you will do, what thoughts are going on in your mind? Regarding what plans are coming up in your mind regarding how you will prepare audit over the next whatever hours are there. Abhi to we'll have to talk in terms of hours only, right? So tell me what thoughts are coming in your mind regarding the, what you say, right, regarding your preparation. Maybe some idea which is brilliant, which can help everyone, right? Or a good realization or learning you have had and you've decided to implement it. Bolo? Yes? Anyone? What you'll do MCQ also, you'll do correct and correct also. Oh my God. You'll keep composition of mind also. वो भी तो बहुत important है ना? Yes. You'll do some writing practice. Tell me something like, which will be beneficial for everyone, whoever is listening, whoever, it's that turning point in their preparation for the exams. Is how you have been on the battlefield for since the beginning of the month, and how you continue to be over there. Okay, first we'll revise whatever you have covered now. Okay, so at least you get a starting point for the revision. Okay, that's nice. So it's helped you, it's helped you to decide. Okay, और क्या करोगे? कुछ नहीं सोचा? तुम बोलते मैम हम ज्यादा नहीं सोचते, कुछ तो सोचा होगा. MTP, RTP, do you have any plans to do those? You should have a plan, right? So MTP, RTP suggested of last 2 to 3 attempts, at least, go through them. Because that takes you to different topics over there, and you are able to identify the question, and then you are able to recollect the points over there. So that's very interesting and important. Okay, right. So I'm coming to items of financial statement, but just a question came to my mind, so let me ask it to you. What are the circumstances for issue of a new engagement letter in case of a recurring audit? Circumstances, it says generally for a recurring audit, no need to issue a new engagement letter. No need to issue new engagement letter, but there are some circumstances which warrant the auditor to issue a new engagement letter in case of a recurring audit. What are those circumstances? Yes, change in the nature and size of the entity business, change in the management, change in the ownership, change in the legal regulatory framework, change in the AFRF, change in the other reporting requirement, change in the terms of engagement. My God, nothing is same, everything is changing. Or if nothing is changing, there is a misunderstanding with the entity as to the terms of the engagement. And the circumstances which warrant the auditor to issue a new engagement letter in case of the recurring audit. Is it clear to all of you? Okay. Tell me, what are the techniques available as substantive analytical procedures? Areva. Tell me, what are the techniques available as substantive analytical procedures? Are there any techniques? है क्या कुछ? Yes, one technique is compare it with the prior period balances. That is called as trend analysis. Okay. Then you check the asset liability income expense, so that you are doing the ratio analysis. Then you check it with the non-financial information. So that means you're doing the reasonableness test. And based on the past information, you try to predict the current account balances. So that is your ratio, what you say, your structural modeling over there. Right? So trend analysis, ratio analysis, reasonableness test, and the structural modeling. Right? So it's a statistical tool. Right? What are these? These are the techniques available as the substantive analytical procedures. Right? The techniques available as the substantive analytical procedures. Okay. What are the methods of obtaining the audit evidence? The most simplest question. Two more questions, and then I'll come to the items of financial statement. Let the files open. No. Let the, all the butterflies come out in the garden and tell you, oh, we are the different answers. Right? What are the methods of obtaining the audit evidence? Yes, everyone. Inspection, document or asset, confirmation, direct written response to the auditor from a third party, analytical procedures, SA 520, inquiry of people within or outside the entity, extensively used throughout the audit, observation, taking a look at a process or a procedure being performed by others, recalculation, checking the mathematical accuracy, and reperformance, that is performing a procedure again. Right? So inspection, confirmation, analytical procedures, inquiry, observation, recalculation, and the reperformance. Okay. What are the principles? Oh my God, I'm asking you so many principles. Principles of financial propriety. Then there are principal contents of engagement letter also. So ye kya hai na? What are the principles which are useful in assessing the reliability of the audit evidence? What are the principles which are useful? Okay, you'll say, yeah, this evidence more reliable. When it is in writing, evidence in documentary form, written evidence is more reliable than the oral evidence. Right. Then after that, what does it say? Evidence obtained from independent sources from outside the entity is more reliable than that obtained from the entity. Then evidence which is directly obtained, directly auditor ko evidence mila, not through the client. What does it say? More reliable. Evidence which is directly obtained by the auditor. Then when controls in the organization are effective, it says even the internal evidence would be more reliable as compared to when the controls are not effective. And original documents, what does it say? Original documents are more reliable than the photocopies, facsimiled, digitized electronic form or so. What are these? These are the principles useful in assessing the reliability of the audit evidence. Right? Principles useful in assessing the reliability of the audit evidence. Okay. Right. Now let's come to this chapter of the items of the financial statement. Right. So in this particular, right, there are 11 items of the balance sheet and 6 items of the profit and loss account. For each of the item of the financial statement, one, you need to check what theory, what definitions or some content which is given at the beginning, like for provisions and contingent liabilities, they've given the definition of what do you mean by provision, contingent liability. Or for fixed assets, they've given the capital revenue expenditure. When you say that an expenditure is a capital expenditure, sometimes expenditure of a revenue nature is also capitalized. And so what is a current liability, right? So that type of some theory would be there, like, some technical stuff over there. Right? Then second one is the audit. Audit is also assertion wise, that how you check the existence, the completeness, the rights and obligation, valuation and allocation. This is for the balance sheet items. And for the profit and loss account items, you have to check the occurrence, the completeness and the measurement. Like the occurrence, the completeness and the measurement. And third part which you have over there is regarding the Schedule 3 disclosures. Right? And they are asking terrific questions in the Schedule 3 disclosures. कि just tell us कि schedule 3 के हिसाब से how the details of the debtors is required to be given, or how the aging analysis of the debtors is, aging report of the debtors is to be given, right? Or what is the, like they ask shareholding, okay? What are the schedule 3 disclosures for shareholding? Shareholders holding more than 10% or shareholders holding more than 5%. So 10% was incorrect, it is 5% over there. One shareholder holding more than 5% of the shares, then what does it say? Separate disclosure is required to be given. तो कोई भी, तो ये तीन चीजें पढ़नी है, theory, audit and the schedule 3. And any question, any heading which you study, you need to think of, okay, what could be the MCQ which can come out of this, what can be the correct incorrect question which can come out of this, and what is the theory question which could be asked from this one. What is the theory question which could be asked from this one. Okay, right. So now let's quickly come to the chapter of the, right, the items of the financial statements, right? So towards the end, abhi to itne disclosures have been added, and then if you studied Caro and you know the clauses of Caro, फिर पता चलता है यार, all this has come because of the reporting in Caro. Auditor has to report in Caro. So auditor will ask management. So that is why there's a management, you are required to give this in your financial statements as per schedule 3. And a management, you have to give it in your financial statements, like CSR. And whether the, and this question has been asked in the exam. So you study how to do audit of property, plant, equipment, existence of intangible asset, and then valuation of debtors and all of that. And exam they ask what are the schedule 3 disclosure requirement for corporate social responsibility. है ना, ऐसा क्वेश्चन आता है एग्जाम में, है ना, दैट इज द टाइप ऑफ क्वेश्चन व्हिच कुड बी कमिंग, राइट? सो व्हाट डज इट से? अमाउंट रिक्वायर्ड टू बी स्पेंट बाय द कंपनी, देन द एक्सपेंडिचर व्हिच हैज बीन इनकर्ड, देन शॉर्टफॉल एट द एंड ऑफ द ईयर, देन प्रीवियस ईयर शॉर्टफॉल, दैट इज लेस एक्सपेंडिचर, रीजंस फॉर द शॉर्टफॉल, देन व्हाट टाइप ऑफ CSR एक्टिविटीज, देन वेदर द CSR एक्टिविटीज आर डन थ्रू अ रिलेटेड पार्टी, एंड आल्सो व्हाट डज इट से, and yes, the CSR, whether it has been done through any related party. Right? And the details of the Benami property held, right? So this is also corresponding to your clause 1E of Caro, right? Property, plant, equipment, and tangible assets. Right? So again, it says any proceedings have been initiated or pending under the Benami, under the Prohibition of Benami Transaction Act. Right? Then any relationship with any struck-off companies, that is, these companies have been written off. Right? So any such investments the company has with the struck-off companies. Right? So name of the struck-off company, the nature of transactions which you have with these type of companies, because those amounts you'll have to write off, and relationship with the struck-off company, if any, is to be disclosed. Right? Then the ratios, this following return, financial management, whatever ratios you study have been given over there. And again, recently a question asked regarding details of the cryptocurrency or the virtual currency. Right? So what schedule 3 disclosures are required? You're dealing in crypto, you're dealing in the virtual currency. So how much profit or loss did you make on these transactions? Then how much balance you have as at the reporting date, and what is the amount of the deposit or advance from any person for the purpose of trading or investing in the cryptocurrency or the virtual currency. Right? So these are a few interesting schedule 3 disclosures which have been given at the end of the chapter. Right? Then after that you have the audit of the other expenses and the audit of the other income, and then you have depreciation, amortization, and the employee benefit expenses, and also the sales and purchases. Right? So what does it say for the legal and legal professional expenses? Again, that's a question there in the recent MTP or so. Right? So it says obtain, है ना? So auditor, you need to obtain from the client. So generally a good starting point is obtain a schedule or something, right? So obtain a month wise, okay? Every month how much legal professional services have you taken, and consultant wise, okay? From each lawyer how much consultancy services have you taken. Okay, then what does it say? Sometimes you have a monthly retainership agreement, okay? Every month you pay to the lawyer 1 lakh, and whatever matter comes he looks into that. So if there is any monthly retainership agreement, so month-wise, consultant-wise, then monthly retainership agreement, then it's not monthly. It is, what does it say? It's a non-recurring expenditure. Then select a sample and vouch. Select a sample and vouch. And now you're saying it's a legal expense incurred by the company. So correspondingly, you need to check whether company has made the provision for the same. Because it tells you that there is a legal expense. That means they've approached the lawyer. If they've approached the lawyer, that means there is some dispute going on. If there is a dispute going on, whether a provision for the same has been made. Right? Whether the provision has been made may also not have been discussed or highlighted to the auditor. Right? So auditor may come to know about unrecorded liabilities through this legal expenses account. power and fuel, again obtain the month-wise schedule, right? Then the rent expense, obtain the month-wise expense recorded for all the 12 months. Then any escalation clauses and whether the expenses are pertaining to the premises used for running the business operations of the entity. Then another question which is also come in your exams is regarding what are the attributes while verifying the other expenses. Okay, I'm checking other expenses like rent, power and fuel, and legal, professional, traveling, advertisement. What are the attributes while verifying the other expenses? So one, what does it say? That expenditure, you're checking advertisement expenditure, it should be related to the period covered under the audit. It should be a revenue expenditure and it should not be a capital expenditure because we are talking about the other expenses. Then it should be supported by the supporting documents. Then it should be classified under the correct expense head. Then it should be authorized as per the delegation of authority, and it should be a business expense and not a personal expenditure. Right, so these are the attributes. What are the attributes while verifying the other expenses? One, it should be related to the current period. Then it should be a revenue expenditure, not a capital expenditure. Then you need to check the supporting documents. Then you need to check whether it has been correctly classified, then whether it has been properly authorized, and also it is related to the business and it is not a personal expenditure. Right, it is a business expenditure and not a personal expenditure. So what are these? These are the attributes while verifying the other expenses. Okay, right. Then after that you have the audit procedures for the depreciation, amortization, all three assertions put together, occurrence, completeness, measurement, and then you also have the employee benefit expenses. Right, so employee benefit expenses, that is the salary, payroll. And so for salary, payroll, one, what you need is the attendance register of the employees, and second, the salary register of the all the employees. Okay, how much salary, what is the breakup of their total salary. So attendance register and the salary register. Then after that, the hired employees and the fired employees. That is the employees which have been hired during the year, the appointment letter, and the employees which have been fired during the year or which have resigned during the year. So again, you need to check the final computation. Right, so attendance register, salary register, then the hired employees and the fired employees, that is the resigned employees. Then also you need to obtain the list of employees and all the employee benefits paid to them like EPF, ESR, and you can always perform the analytical procedure. इतना खूबसूरत लिखते हैं. Perform analytical procedures to obtain audit evidence as to the overall reasonableness of employee benefit expense, which may include production per employee analysis. Okay, so many employees, so much production. What is production per employee? Also, auditor should analyze units produced per employee and compare the same with the previous year and compare it with the industry trends and ask the reasons for the management if any significant variations have been found. So nicely they have written over there regarding the analytical procedures. Are you all with me? Right, so that is regarding the occurrence, completeness, and the measurement. Okay, right. Then this one, 2 to 3 times asked as a separate question in your exams. The analytical procedures for purchases. मालूम है? नहीं मालूम है. You go to the exam hall, you remember that for Aarti ma'am, I need to get very good marks in audit. You know, she will be so happy, so delighted. We discuss करते हैं, ठीक है? Right? Analytical procedures for purchases. And अभी क्या पढ़ा था? Analytical procedures for employee benefit expenses, overall reasonableness, production per employee, and all of that. अब क्या है? Analytical procedures for the purchases. Right, so what are the analytical procedures for the purchases? The stock consumption analysis, then the stock composition analysis, consumption, composition, then ratio analysis and the quantitative reconciliation, ratio analysis and the quantitative reconciliation. So what are the 4 headings? Consumption, composition, ratio, and quantitative reconciliation. Then what does it say? Raw material consumed as a percentage of the raw material consumed as per the manufacturing account. Consumption. So raw material consumed. Then composition, raw material as a percentage of the total stock. Right, consumption, what is the raw material consumed? Then composition, raw material as a percentage of the total stock. Then ratio, creditor turnover ratio, stock turnover ratio. Right, then what does it say? This you compare the same with the previous year, compare the same with the previous year, compare the same with the previous year. Right? For reconciliation, opening stock, add purchases, less consumption, closing stock. Right? Opening stock, add purchases, less consumption, and the closing stock. And then compare the same with the previous year and ask the reasons from the management if any significant variations are found. Again, ask the reasons from the management if any significant variations have been found. Right? So these are the analytical procedures for the purchases. What are the analytical procedures? Consumption analysis, stock composition analysis, ratio analysis, and the quantitative reconciliation. Right, and the quantitative reconciliation. Okay, right, so you have the completeness measurement, and then you also have the occurrence of the purchases. What you need to check, that purchases are neither understated or overstated. Right, so this could be a separate question in your exams. How do you check that purchases are neither understated? Okay, if company has purchased 10 kg of raw material, they should show 10 kg. They should neither show 20 nor show 5. Purchases are neither understated or overstated. So one, purchases should not be made from any fictitious vendors. Right? So what does it say? Whether any fictitious vendors have been booked. So you need to check the process followed to ensure the existence of the vendor. So first you need to check the vendor. Then the goods, whether they've been actually received at the factory gate and there is an entry in the gate inward register. Then after the goods have been received, whether the quality inspection has been done. Right? Then after the entry in the gate inward register, whether the GRN, the goods received note, has been prepared. Then whether the purchase invoice has been approved as per the delegation of the authority. And then whether the stock records have been updated. Right? So that much 10 kg of raw material you've added it to your stock. Right, so what does it say? Under overstatement of the purchases, right? So fictitious vendor, goods, then the gate inward register, then the quality, then the goods received note, then the purchase invoice, and then the stock records have been updated, right? The stock records have been updated, right? And then after that you have the, right, the other income. What is there in the other income? Yes, interest income, then the dividend income, and the gain or loss on sale of investments in the mutual fund. What are the three in the other income? Interest income, dividend income, and the gain or loss of sale of investment in the mutual fund. For each of them, one, you have to know what is the recognition criteria, and second, you have to know what are the audit procedure. One, you need to know the recognition criteria, and second, you need to know what are the audit procedure, right? So what does it say? Recognition criteria for interest income, it is on the time proportion basis. Right, then recognition criteria for dividend income, when the right to receive the payment of dividend has been established, it is probable that the economic benefits will flow to the entity and the amount of dividend can be measured reliably. And what does it say? Gain or loss of sale of investments in the mutual fund, it is the difference between the redemption price and the carrying value, right, on the date of the transfer of the title from the entity. Right, so that's the recognition criteria. And then you have the audit procedure. Interest income कैसे recognize करें? Time proportionate basis. Then as an auditor, how you do the audit? You obtain a list of the fixed deposits opened during the year and those which are outstanding. Then you check the arithmetical accuracy of the interest calculation. Right? Then you also can obtain the confirmation from the bank financial institution. Then you obtain a confirmation of the interest income, and also you can obtain a copy of the form 26AS, that is the tax deducted at source by the bank. Okay, right. Then dividend income, when the right to receive payment of dividend has been established, and again the gain or loss, you need to check the transfer of the title from the entity. Right, the transfer of the title from the entity. Right, so that is regarding the other income. Then after the other income, you have the main income, which is the main income over here, the sale. Right, and sales, what do they talk about? Revenue is not overstated. For purchases, what did we study? Right, for purchases, what did we study? Purchases we studied, they should neither be understated or overstated. But for revenue, what do they say? It should not be overstated. So how can you blow up the revenue of the company? How you can increase the revenue of the company? Single sales invoice recorded twice, or cancelled sales invoice has been recorded. So single or cancelled. Then you test check a few invoices with reference to the relevant entries in the sales journal. Right, so single sales invoice, cancelled sales invoice, and the few invoices. Then you also obtain the confirmation from few customers regarding the genuineness of the transaction. Right, so genuineness, that means it should not be a fictitious customer. Then shipments have been done without the consent and agreement of the customer. Then also what does it say? Whether unearned revenue has been recorded as earned, whether there is substantial uncertainty about the collectability, and customer obligations are contingent on other actions. Right, so what does it say over there? Or revenue is not overstated. So how you check? Single sales invoice should not be recorded twice. Cancel sales invoice not to be recorded. Then you check few invoices with the sales journal. Right, then after that, fictitious customers, you need to check the genuineness of the transaction. Then shipments are done without the consent. Then whether customer obligations are contingent on other actions. Then unearned revenue has been recorded as earned, or there is substantial uncertainty about the collectability. Okay, right, so that is regarding the overstatement of the revenue. Okay, and then after that, over here we have the disclosures, right? So disclosures over here regarding the provisions and contingent liabilities. So look over here, I told you, there is some theory given over there, right? So like there is the definition of provision and the definition of contingent liability, right? So what is provision? It is a present obligation as a result of past event. It is probable that outflow of resources will be required, and what does it say? A reliable estimate can be made of the amount. Right, a reliable estimate can be made. And what is contingent liability? It is a possible obligation, where the occurrence of which will be, the occurrence or non-occurrence will be confirmed with one or more future events which are not wholly within the control of the entity. Or it is a present obligation, but it is not probable that outflow will be required, or the amount cannot be measured reliably. If the amount is, what you say, outflow is probable, it is certain, and the amount can be measured, then it is a provision. But if outflow is not probable and the amount cannot be measured reliably, though it is a present obligation, it is to be treated as a contingent liability. Why? Because the amount cannot be measured and there is probability. Okay, right. Then after that, what are the points you have over there is regarding the loans and advances and the other current assets, right? So loans and advances and the other current assets, right? So this is on the asset side or liability side? 100% asset side, क्योंकि वहाँ लिखा हुआ है other current assets, right? So loans and advances. So one, how do you check the existence? It says by performing the direct confirmation procedures. Then how you come to know that all the loans, all the deposits, all the advances of the company have been recorded? Obtain a list of all the advances. Then also what you can do, verify the loan agreement, then verify the loans, whether it is authorized by the memorandum articles of association, whether they are within the competence of the persons who have advanced the same. Then you check the minutes of the meeting, so that is for the authorization. Then the security against which the loan has been given, then whether the loan has been given to a related party, then also statutory, whether you have any ITC, input tax credit, and you can also check the statutory returns. Right, and you can also check the statutory returns, right? So that's the completeness. है ना? Mind में wiring ऐसा होना चाहिए कि as an auditor, how do you check the existence of loans and advances and other current assets? So you check for the, you obtain the direct confirmation. Then how you check for the completeness? You get a list, then agreement, then also the memorandum articles, then the authorization, then the security, right? Then the minutes of the meeting, related party, GST, and the statutory returns. Then valuation, what you check? Valuation में हमेशा क्या आता है? Method क्या है? You know, what is the method of the valuation? Accounting policy, right? Then you look into the aging, since how many days it is outstanding. The more older it is, the more doubtful it is. If it is doubtful, it might also become a bad debt. If it's a bad debt, you may decide to write it off. And foreign currency balances, you need to check for the restatement, right? Foreign currency balances, you need to check for the restatement, right? So that's the valuation of the loans and advances and the other current assets. Okay. Right, then after that, now aging schedule for trade payable. Can they ask you this box as a separate question in your exam? Yes. And can they ask this one as a specific question? Yes. Aging schedule, schedule 3 disclosure requirement for aging schedule for trade payable. So what do you say? Particulars. Outstanding for the following period, less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. Right? Then particulars, MSME, others, disputed dues, MSME, disputed dues, and the others. Right? So this is the breakup which you need to give for MSME and the other than MSME, and no due date for payment. Then again you need to give the details, right, from the date of the transaction. Okay. Right. Then details regarding the payments to be made to the MSME. Right. Then over here you have the the trade payables and the other current liabilities, right? So trade payable and the other current liabilities, what does it say? Trade payables and the other current liabilities. So again, one, you need to check the existence. So trade payable. A company says we have to pay this money to our creditor, to our supplier. So again, you need to check the invoice. Then since how many days you have to pay, then you can always obtain a confirmation. Then confirmation, he said, no, I have to receive 20,000. Company saying 10,000. So then what you do? Discrepancy revealed. You investigate. And if no reply received, you perform the additional testing. You do the alternative procedures. And then you check for related party and the analytical procedures. Right, related party and the analytical procedures. Okay, right. So now this one, trade receivable aging schedule, है ना, ये भी आ सकता है, separate question, separate box. Undisputed, है ना, undisputed, disputed, good, doubtful, है ना, good, G-O-O-D, good. So D ka doubtful. And then again good and then doubtful. Then less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, more than 3 years. So here it is less than 6 months also. And then the total, right? And the total is also required to be given. So now, items of financial statement, 100-page chapter, I think somewhere in the study material or so. Now, how much effort and fine reading you need to do, because you can't decide on your own what should be Schedule 3 disclosure. You say, ma'am, that we've realized with ICI, okay, we can't decide anything. It is ICI which will decide. Okay, right. So anyways, trade receivable aging schedule. है ना, तो undisputed good, undisputed doubtful, disputed good, and disputed doubtful. Less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, and more than 3 year. Okay, right. And then coming to the trade receivable, what does it say? Again, for trade receivable, you need to check the valuation. है ना, तो वैल्यूएशन बोला तो मेथड फिर how many days, aging, why it is aging? Because you're fighting. So if you're fighting, then you need to check whether it is doubtful. If it is doubtful, you need to make a provision. You may also have to treat it as a bad debt. In that case, you write off. And last point is always regarding the restatement, and then there is point regarding AS 18 and the CARO 20. Okay, so that's the valuation. Then after that, you have the completeness. Here, completeness kya hai? Cut off. Right. So again, this dabba. You say, ma'am, what dabba? Not dabba. Box. This could be a separate question in your exam. Okay, you want to check whether all details related to this period have they been accounted for. So how you need to check for the invoices issued during the last few days. 28 March, 29 March, 30 March, and the last few days of the year. What you check? That they have been included in the debtors, goods have been dispatched, and they are not lying with the company. Right? Then what does it say? All goods dispatched prior to the year end. Right? So invoices issued. Then you check the goods dispatch, whether they have been invoiced and included in the debtors. And no goods dispatched after the year end have been invoiced. So invoices issued, have been, the goods have been dispatched. Then for goods dispatch, invoices have been raised, right? Invoices have been raised, and no goods dispatch after the year end have been invoiced in the current year, right? So that is how you need to satisfy yourself regarding the cut-offs, right? That is how you need to satisfy regarding the cut-offs, right? Then you have the existence of the debtors, then the test of control, right? This one, again, Schedule 3 disclosures of cash and cash equivalents. Right, so cash and cash equivalents, balance with the bank, right? So what money you have with the bank, then what checks on drafts on hand you have, then what cash on hand you have, and the others. Then money which has been kept aside for a specific purpose, then money which has been kept aside as the margin money, then repatriation restrictions if any, and bank deposits with more than 12 months maturity. Right, so that's the Schedule 3 disclosures for the cash and cash equivalents. Okay, and then again you have the audit procedures for the cash and cash equivalents. Okay, right, then inventory. Inventory में क्या है? They ask a question regarding the valuation, and valuation में भी they ask finished goods and goods for resale. Right, so what you need to one check at what are the items included in the cost. Then inventories, it is finished goods, no, so has been recognized at the lower of cost or NRV, cost or NRV, whichever is lower. Then it's the finished good having a net realizable value which is less than the cost. तो वैसा अगर कुछ raw material या work in progress होगा, so that also needs to be written down. Right, so what does it say? Any items partly processed, semi-processed, and raw materials and work in progress, even that should be written down. Then you also need to check for the obsolete, damaged, slow-moving, non-moving items, their possible realizable value. Right, then the inventory aging. So how old is the inventory? Accordingly, more the provision is according the valuation is to be done. Right, so for finished goods and for goods for resale. Right, then the work in progress, the stages of the production. Then what are the elements of the cost, and the abnormal wastage factors have been excluded. For raw material, again, what are the elements of the cost? If standard cost have been used, then you test check the cost prices with the purchase invoices. And again, you check for the valuation of the damaged or the obsolete inventories. Right? So, देखो, inventory. In inventory valuation. In valuation, that can be a specific question regarding valuation of raw material, or work in progress, or regarding the finished goods. Okay, right, then rights and obligation, you need to check the documentation whether it is in the name of the entity. Right, you need to check the consigned goods, the purchase document, the agreement, the invoices, right, the confirmations and the declaration from the third party. Right, so that is regarding the inventory. And then before the inventory, what do we have over here? Right, we have the intangible assets and the tangible assets. Right, for intangible assets, what does it say? How do you check the intangible, tangible, both for them? How you check the valuation? Amortization. For tangible, you'll check the depreciation. Right, then the amortization method, then any impairment assessment, right, where the impairment assessment has been done. Right, then completeness may, listen to me carefully, in completeness you have to check the opening balance, additions, deletions, and the closing balance. Opening balance, you can check it from the previous year audited financial statements. Then you need to check the additions during the year. And what is the schedule of the additions, right? Then the listing of the additions, the criteria of intangible asset. Research cost should not be recognized as an intangible asset. Then certificate of commencement. Then additions have been approved. Then there is a process like calling competitive quotations and then finalizing the vendor. Right? So addition ka there is a point over there. Then deletion. Okay, why you're deleting this trademark of the company? What is the rationale? Then is it properly authorized? Then what is the process followed for the deletion of the asset? And also the gain or loss on the sale of the asset. Right, gain or loss on the disposal. Right, so that's regarding the completeness. And then there is a question regarding the audit procedures to check the existence of the intangible assets. Audit procedures to check the existence of the intangible assets. So how do you check the existence? You check one, whether it is in active use. If it is not in active use, then it should be written off. Then what does it say? It should be written off if it is not in active use. Then you need to check the existence of software by checking the sale of the related goods and services, and existence of design and drawings by checking the production data of the company. Right, so this is how you can check the existence of the intangible assets. How you can check the existence? Active use, then not in active use, then it should be written off, it should be deleted from the intangible asset. Then existence of the design and drawing, how you can check that? By checking the production data, and existence of the software, whether it has been used for the sale of the goods, related services and goods during the period. Are you getting that? Right, so that is regarding the existence of the intangible assets. Right, and then after that over here you have the tangible fixed assets. Right, so tangible fixed assets, again for that you have the rights and obligation. Right, so here what is the rights and obligation? Intangible mein rights and obligation was invoices and contract. Here what does it say? Rights and obligation for immovable property, whether the title deeds are in the name of the company, whether the conveyance deed is in the name of the company, land and building. Then for movable properties, whether the invoices are in the name of the company. Then if that property has been mortgaged with the bank, financial institution, you can obtain a confirmation, and you can also verify the register of the charges. Right, so that's the rights and obligation. Then you have the valuation. Completeness mein kya aayega? Opening balance, add less, and the closing. And the opening balance, add less, and the closing. And then after that you also have the existence. So existence, physical verification. For intangible, how you checked existence? Intangible के लिए active use, not in active use, existence of software, existence of design and drawing. Here what you do, physical verification policy, physical verification report, and the appropriate supervision. Right, and the appropriate supervision, and then after that you have the details regarding the borrowings and also regarding the share capital. Right, so just in the reverse strategy, you know, because if you always study from the beginning, maybe towards the end you always use just to wind up the points over there. Right, so it's a wonderful idea even to try to study it from the end. Okay, right, so I see some 35 further MCQs have been uploaded on the app, right? So you can take out some time. If you find it to be beneficial for you, then you may, yes, certainly do these particular MCQs. All the latest ones from the MTP, RTPs and all of those, we are putting it over there, right? So you've given me your very, very precious time just by giving your time few hours before the exam, right? So really very grateful to you for that. Just whatever I started with, I tell you the same thing again, that be very firm in your preparation. Do some writing practice regarding how your presentation, visualize how your paper is going to be beautiful, how you're going to write good answers, how you're going to have nice presentation in the paper. Right, and then also plan to look into the MTP, RTP suggested of last 2 to 3 attempts. Are you getting that? Right, then you also look into the MCQs and the correct and so whatever chapters we have covered, you can go through them. Then tomorrow morning plan to look into the other chapters over there, right? Auditing standards, you can look into analytical procedures, audit sampling, external confirmation, there's so many of them. Right, so wishing you all the very, very best for your exams, and looking forward to see you all at CA final also, and waiting to listen about your positive results in the exam. Right, so thank you so much for your patient listening, and I wish you all the very best for your exams. Right, thank you so much.